Good afternoon and welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. And Santo, what a strong pushback from the bulls after the sell-off that we saw yesterday. We have managed to recover, we have managed to recover and put on more than what we lost yesterday. And it's almost like as if Jackson Hole did not even happen. Like Bulls, it did not even occur.
Bulls appear to be on steroids for the moment.
Steroid, I think, is something a bit more stronger than steroids, probably. Not that we can name it. But if you look at the Nifty and Sensex, they have just shrugged off all the rate hike concerns that the market had been talking about on Friday evening and Monday as well. Interestingly, Santo, the Forex market is where a lot of action is also happening. The rupee recovered almost 50 pips or 50 paisa from yesterday's closing low of about 76.96, and a very, very sharp recovery there against the US dollar. So interesting to see what is happening in the Forex market as well. Clearly, it seems like a lot of foreign inflows, along with some probably support from the central bank also coming in the Forex market. But I think the overarching theme, Santo, clearly is, and this is something SBI's research wing touched upon, TINA equal to India. Basically, without India, there is no other alternative to invest for foreign investors because of the what you may call the serenity, the relative serenity of macroeconomic indicators. Inflation is not that big a concern. Growth is, pumping quite strong, and of course, valuations are almost comfortable, if not, a little pricey.
Well, CJ, what is the VIX saying? I mean, you always
exactly. Surprisingly, in the morning when we were, we opened the show, VIX was higher by about 9%. If you look at the VIX right now, it's actually down about 5.5%. So the swing has been very, very rapid, and clearly the bears have had to take out their positions.
Well, I think it can be a double-edged sword, CJ. I agreed that India is in a better position compared to the rest of the major economies, but that also means that if too much money comes here, at some point, investors are bound to look at valuation. So you can't just
2021.
Probably. See, in the short term, liquidity will definitely triumph. There's no doubt about that. But it can't happen over long periods of time. At some point, fundamentals do come back into play, and if it's just going to be the TINA factor, then it's hard to see how it can sustain beyond a certain point.
And Santo, the Fed has not even yet gone full speed on contracting its balance sheet. Apparently, the best of or the highest quantum of the the contraction in balance sheet is supposed to come over the next 2 to 3 months.
Definitely, and if the Fed has made it clear that it wants to tamp down on inflation at any cost, then clearly balance sheet is going to be the next on its books. But that said, CJ, concerns of rate hikes, I feel should resurface from time to time, as it has been. You saw that last week. So that, I think, could be something which will most likely put a lid or cap the upside that is from.
Well, Santo, all of that said, I don't think heading into the Ganesh Chaturthi holiday tomorrow, I don't think anybody in the market at this point of time cares about rate hikes or anything else. I think it's been a very, very...
Harta is the one who solves all the problems,
absolutely, and
the bulls
clearly
must be hoping that the problems go away when they come back for trading.
I think he has already delivered, probably, in a lot of people's opinion. So whether you believe it or not. That said, let's now quickly move on to some of the stocks that were buzzing in trade. Santo, starting off with
Federal Bank. Now the stock is almost at a near 5-year high. Spectacular performance, and if you look at it from the lows of COVID, the stock is up now more than 3 times, 3.5 times. So it's been a good 3-bagger. Of course, those who have been invested in the stock for more than 5 years, they have little to cheer because the stock price is just getting back where it was. But now quite a few things changing. The first quarter numbers clearly were quite strong, and among the key things that seem to be working for the bank at this point is that, according to the management, the guidance which it had given for the restructured slippages in the restructured book, that was about 20 to 25%. That was just about 12 to 13%. That is sharply.
It ended up being very much lesser than what they were expecting.
It sees credit costs at 40 to 50 bips, which is the same as compared to other banks. It expects net interest margins to improve by at least 5 to 7 bips over the next couple of quarters. The corporate book of Federal Bank, that's also seeing some bit of traction there, and the management did say that companies are again coming back to banks for loans, and overall Federal Bank is targeting 15 to 18% growth, credit growth for this year. So the stock clearly appears to be in a sweet spot right now, and 124 was the closing high in October 2017, and if the stock manages to take that out, probably, I'm not a great fan of technicals like you are, but since it's widely held view in the market that when it takes out a long-term resistance level, then there's a fresh momentum and
building
fresh
up,
round of buying that comes in even from short-term.
I think, Santo, if you look at the past 3 months action in the banking pack, clearly Federal Bank, along with a lot of other, mid-tier, if I may call them mid-tier banks, have become the, the preferred investment vehicle for a lot of investors out there. If you look at not only Federal, even City Union and some of the other smaller banks have been getting a lot of traction. Bank of Baroda is another one in that league, and clearly you can't really argue on the fundamentals at this point of time, because that is something that has been in the favor of the banking pack for the past 12 months. But I just feel that probably on a technical level is, I think, where the argument might be on the shorter term side, given the 40% rally that we have seen Y to date in this stock, outperforming the entire banking space, mostly the entire banking space, and of course the broader market. There is possibility or room for some profit booking to happen on the stock, and as you spoke about, that resistance at 124, that of course will be a very key level to look out for, whether we see some bit of selling from that level, or do we take that past and maybe head towards fresh record high. That will be something very interesting to watch out for. One stock on my radar, Santo, and you talked about the corporate lending side, basically a lot of traction coming, companies are coming back, and this stock is probably the creme de la creme when it comes to capital goods and of course infra play, and that is Larsen and Toubro. But very interesting note coming out from Ambit Capital today. Ambit has taken a very, very contrarian call on L&T by giving a sell rating on the stock. They believe that a lot of the expectation around the company in terms of that it is a very cheap large cap stock with a tailwind with the capex recovery may actually be optical, because if you look at it from a price to free cash flow basis, L&T actually is almost 22 times in that sense 1 year forward. So clearly this is not a cheap stock. They're also expecting L&T's ability to generate cash going forward, at least in the next 3 to 4 years, to suffer, because their working capital efficiency may deteriorate from here on, and they are investing very heavily in their core EPC or infra business going ahead. Capex in the infra business is almost going to double over the next 3 to 4 years is what the company has guided for. So that is something to watch out for. Plus, the thing with L&T, Santo, for the past 2 years was that government was releasing funds very faster. After the 2018-2019 knock, and you remember there was almost a public sort of a spat between L&T and the government with respect to releasing of funds to some of the vendors out there who are L&T's vendors, from whom L&T had a lot of payables, receivables to get. I think that situation may have a repeat again. That is the view of Ambit, because it feels that the fiscal could get stretched in the coming years, and that is something to watch out for. And lastly, the brokerage firm is expecting almost a 26% downside at this point of time, which is a very, very contrarian call in the market, given that everybody else is almost expecting a 20 to 30% upside on the stock.
Well, I'll just use one of your favorite, or at least the phrase that you've used a few times in the past. What is that? Baal ki khal, or is it the other way around? It's almost probably splitting hairs at this point in time. Just look at the stock, the price performance of the stock over the last few months. Now, besides that, CJ, at this point, exports doesn't look very great given the stress in the global economy. Consumption in some ways is faltering a bit because of high inflation. Of course, FMCG companies have managed to come out with a decent set of numbers, but if you look at some of the other sectors like auto, especially the low end, consumption is clearly suffering. Now, capex is one engine which seems to be doing well. Now, if you're saying that when you're going against L&T, indirectly you're saying that even the capex cycle won't fire.
Yeah, well, there are skeptics out there.
Definitely. Now, if none of these engines are going to fire, I really wonder why is it that then investors would be very, narratives, whatever you call that. Well, at this point, I would go purely by the price performance. The market does not seem to be at least taking that into consideration for now. Maybe in a few months or few quarters later, that would be another story. At least for the time being, there seems to be no sign of, no visible sign of a slowdown in capex.
I think, Santo, this is a point that I also mentioned, whenever you had taken L&T as your favorite stock, and I just felt that the guidance that the company had given, despite all the commentary and all the brouhaha around the capex revival story. The guidance was something that did not enthuse me at all, because it was almost similar to what they had given for FY22. If you are expecting something good, you know, you would expect that to also reflect in the guidance. Yeah, you can say that they are trying to be conservative and therefore may over deliver, but L&T really does not have that track record. It's no Infosys that, you know, they will give a conservative guidance and then over deliver on those sort of guidance. So that is something that always has, you know, caught, has been a needle prick on my in my eye in that sense.
Well, next stock, Pyramil Enterprises. The stock has come off sharply today, but that's more of an adjustment because it's gone ex-pharma. The pharma business has now been demerged, and that's why you're seeing a sharp decline in the stock price today. Now, brokerage house CLSA has come out with a report, and it has assigned a price to book value, given a sum of the parts valuation of 1,170 rupees, which is not very far from the current market price. According to CLSA, FY23 loan growth is likely to be muted, although things may start looking up from FY24 onwards. Already you're seeing some bit of pressure on the wholesale lending, but because of the acquisition of DHFL, probably you will see the retail side of it might be slightly better. But the key thing which caught my attention in the CLSA report was that it's assigned a price to book value of 0.8 times for
very interesting.
Pyramil Enterprise, which is pretty low. I mean, at the other end, you have somebody like Bajaj Finance, which is almost at 7 times. So that's an extreme. So even if not a Bajaj Finance, you would expect that it should be somewhere at least 2 or 3 times, right? So that given the case, I don't think there is much of an upside from current levels, and probably you could see the stock being range bound around these levels for some time.
I think, Santo, clearly this much awaited demerger of the pharma business is something that a lot of investors have been waiting for, and now that the stock is now trading ex of demerger, the pharma entity would probably be listed by the third quarter of the current fiscal year. So that will be something, an event to look out for, because it will unlock a lot of value for investors who are holding Pyramil Enterprises shares. They will end up getting almost 4 shares of the pharma business. Apart from that, of course, now it allows the market to price the lending business or the financial services business, not just pure lending, but financial services as well, included in all of that. And clearly, the issue with Pyramil earlier was, Santo, for the past 3-4 years, was the fact that they had a lot of developer loans on their book. They had a lot of exposure to the real estate space, and that is something that, you know, market was not really willing to price at a much premium. And I think the past 1 year, we have seen a very decent rally in the stock because of the expectation with the revival in the residential property market. Pyramil, you would expect that is one company that will do well, and now with the acquisition of DHFL, the retail portfolio should also start getting a lot of traction in the wholesale and retail portfolio. So I think it's a bit conservative on part of CLSA to price it at 0.8 times price to book value on a one year forward basis. I think you could expect some bit of re-rating there. And overall, with, as I mentioned, with the property market doing so well, I mean, you would expect a housing lender like Pyramil to overall do quite well in that phase of the market. Last stock, Santo, on my radar today is actually it's a very forgotten space, which is of the lubricant industry basically, and this is Gulf Oil Lubricants.
Yeah, there used to be a time back, I think this was many years back.
Many years ago.
When Castrol used to be one of the most sought after stocks.
Absolutely.
On the market.
And even today, I think even if you talk to people, I think they'll still first think about Castrol, and Gulf Oil probably would never even come up in a conversation. But clearly, very interesting report today. The stock surged quite significantly, had a good traction in the market today after HDFC Securities gave a very interesting buy call on the stock. They believe that the company is very steadily improving its market share in the lubricant industry at this point of time, and has also given good profitability at time when oil prices have been rising. That is because Gulf Oil clearly is reflecting the strength of being able to pass on the prices to the end consumer, and that is something that is helping them remain profitable in a scenario like this. The brokerage firm has given, they expect an upside of about 21 to 22% over the next 2 quarters in the stock. In their bull case, in their base case, they're expecting about 15 or 16% sort of returns in the next 2 quarters. So clearly, Santo, one stock to watch out for if you're a positional trader or a short-term trader in this market. This is one stock to keep an eye out on.
Well, very interesting stock this one, CJ, Gulf Oil. First quarter numbers have been pretty strong, huge jump in top line, and as you pointed out, the margins around 13%. It's taken a bit of a knock, but still the company has managed to kind of cushion the impact.
Yeah.
Now, the thing about Gulf Oil here is that it caters, the two-wheeler market is a major chunk of its addressable market.
Yeah.
It has said that all its segments have done well, but clearly in two-wheeler we are still seeing the recovery being a little patchy.
Yeah.
But even otherwise, the stock has seen a good run up. In fact, it almost seems to be undergoing a re-rating at this point in time. And what I found a little surprising again, CJ, is that compared to its high of which it had touched in 2018 or 2019, it topped 1,000 rupees. The stock is still available at a 50% discount. It's half of that. This despite the fact that overall the financials have improved considerably.
Yes.
Mainly the reason would have been the bearish outlook on the auto sector, but now that the outlook on the auto sector itself has changed, probably you could see some.
And Santo, it's not only that my picking the stock probably is for the the short-term gain, but even if you are somebody who's looking for a dividend play, a decent dividend play, then Gulf Oil could be your stock. I mean, people talk about Castrol, of course, being a good dividend play, but Gulf Oil also in the lubricant industry is a very, very good stock when it comes to a high dividend yield in the market. So clearly, something for both sets of investors to look at.
Well, last stock on our watch list this afternoon is CSC. Stock is among the big gainers today, up by more than 6%. In fact, it's been struggling.
A lot of traction.
Yes, but it's been struggling around the 80 rupee mark for a while. Quite a few brokerages have turned bullish on the stock over the last few months. The first quarter numbers were pretty decent, and if you look at the performance of almost all the circles where it is present in Kolkata, which is its main, which accounts for a big chunk of its revenues, the demand is now almost at pre-COVID levels. Now, the only thing there is that the tariff hike so far has not come through, which means the pricing power is still a problem. The first quarter numbers were lower than expected, mainly because CSE did not take the fuel cost adjustment, which it's actually entitled to do. The first quarter it has not taken. Probably you could see that in the second quarter, and maybe the numbers there could get a bump up. And if you look at the circles, the Rajasthan circle for now is doing pretty well. Dhariwal posted very strong numbers there. Kota is now showing signs of stabilizing. Noida was good. If you look at Malegaon, that is seems to be one problem area where the losses have widened a bit, but that's also because many of the power looms had to close down because of high cotton prices. So that also appears to be a temporary thing, not really a structural problem out there. Elara, Edelweiss and MK are the brokerages which are bullish on the stock, and all the price targets are in excess of 100 rupees.
Yeah, Santo, I think clearly this is another stock that is moving in tandem with the entire power sector at this point of time. Clearly, there is a lot of interest in the power sector. A lot of it is also driven by what is happening on the policy corridors, because with the electricity amendment bill coming into the parliament, that has really boosted sentiment around it. A lot of people are expecting a lot of things to change in the coming years with that amendment coming in place, and investors feel that these are stocks that are really available on cheap, right? The power sector probably has a lost decade, much like the real estate space in the past 10-12 years. So clearly, very, very cheap valuation. Upside is almost limitless if things do work out. And I think a lot of the rally at this point of time is driven by hope. But of course, if earnings improvement do continue to come in, as in the case of CESC, I think you could see these stocks now figuring into institutional portfolios as well, not so far from here.
Well, and with that, a quick look at the market. Nifty up 2.6%.
Wow.
It's at 17.
It's almost, this is the sort of gains, it's almost 50% of the sort of gains when we saw, when the FM announced the corporate tax cut back in 2019.
Probably you could see the Nifty take out the 18,000 mark. What's your bet?
I think clearly, Santo, now with the 17,760 mark already on the offer, and if by Friday, if we are above 850 on the Nifty, then I think 20,000 should be here by the end of this year. I think a lot of people, a lot of quantitative analysts are of the view that if we do break or close above the 17,850 mark over any time over the next 2 weeks, I think that will be a sure sign. Another sure sign, Santo, and this is something that we mentioned yesterday also, we have defended 17,000 very, very well. At this point of time, it would be a brave heart to bet that the market will go below 17,000 anytime soon, and because of that defense, I think you could be very confident that record highs should be on the anvil, not so far from today.
Well, besides the April-June GDP growth data, CJ, what else is the market tracking?
So, Santo, a couple of data points coming out today in the US, especially the job openings data will come out, and let's not forget that job market is what has saved the US economy from being categorized into being into a recession. So clearly this will be one data point very important and very keenly watched by not only the market but the US Fed as well. This will be due in the evening. Also, German inflation data is something that is coming out tomorrow, so that is something to keep an eye out on. And also India's Q1 or the April-June quarter GDP numbers should also be out tomorrow. So that is something that the market will probably look at. Although GDP data tends to not move our market that much, but is the commentary around it, and of course because of the high frequency indicators so far have indicated that the economy is in a pink of health. Let's see how that data also comes out.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again Thursday morning at 9 a.m. Till then, have a great trading session, great day, and of course, happy Ganesh Chaturthi.